So you know very well that Bangladesh is one of the few countries in the world in which Islamic banks have grown with a momentum in last decade. And right now we have 8 full-fledged Islamic banks and at least 10 conventional banks and more than 7 to 8 foreign banks are it is not exactly more 7 to 8 but it is at least 5 of the foreign banks are providing Islamic banking services in addition to their conventional banking services, and in aggregate their contribution in the deposit mobilization and also the investment in different sectors have reached to more than 25%, in the total banking sector. I mean, out of the total deposit mobilized by the banking industry in Bangladesh, 25%, more than 25% deposits have been mobilized by the Islamic banks, and more than 25% investment has been made by the Islamic banks. So over time, they are taking a significant place in the banking industry of Bangladesh. However, there is an absence of banking act, a separate banking act to govern the Islamic banks, though Islamic banks are mainly operated under the guidance of Islamic Sharia. However, to make sure that Islamic Sharia is being maintained in all aspects of these banks, a separate banking act is required. So what is available in Bangladesh, as we couldn't introduce a separate act, Bangladesh Bank formed a group which is a focus group represented by Islamic scholars, represented by people from Islamic banks, represented by people from other stakeholders. They form a focus group. I mean, Bangladesh Bank has formed a focus group and created a guidelines for conducting Islamic banking in Bangladesh. So in today's class, we'll try to see some guidelines for conducting Islamic banks in Bangladesh set by this focus group, and what are the issues on which this guideline has put attention. So the guideline has put attention on the deposit products, investment products to be used by Islamic banks, and also discusses on the liquidity issues and how the financial accounts will be prepared by Islamic banks, and how in overall the Islamic banks will be regulated and supervised. And it has been mentioned that in addition to this guideline, Banking Companies Act 1991, then Companies Act 1994, then other regulations which are being circulated and provided by Bangladesh Bank from time to time will also be applicable for the Islamic banks. And this guideline has been issued not as a substitute of the existing Banking Companies Act, Rather, it is a kind of supplementary material which will be guiding the Islamic banking operation in Bangladesh. And like any act, rules, this guideline also starts with giving some definitions which will be used throughout the guideline. And I believe that these definitions will be much familiar to you as you are in the lecture 9 today. So these are basically referring the deposits of Islamic banks, investment of Islamic banks, and who are the Islamic banks and what do Islamic bank business do, and who are the clients of Islamic bank. So one thing from the definition, I just like to highlight that the rules and regulation from the Sharia is the primary source of operation of Islamic banks. And if you want to check that whether the introduction of this product or introduction of this service is Sharia compliant or not, immediately you have to check what Sharia is saying about this or this kind of product or this kind of services. So we already have learned that Sharia has its source from the Holy Quran and the Sunnah. And that means we have to check this and other fiqh which are dependent on Holy Quran and Sunnah. And note that it is not hadith. So there are differences between hadith and Sunnah. So all hadiths are not Sunnah, but all Sunnahs are included in hadith. So you look for it from other sources, but note that Holy Quran and Sunnah are the origin of the Sharia, and Sharia compliance is the prima facie regulation for Islamic banks. And let's talk about some sections. And first section is about if we want to begin a full-fledged Islamic banks, what are the criteria I have to meet or we have to meet? So these are very important. Why important? Because you are observing that a number of Islamic banks have started operation in our country recently. I mean, in recent decade. And what are the criteria they met actually, or they had to meet to start the full-fledged Islamic banks in Bangladesh? So let's discuss on first couple of points, then we'll start a poll to check that what you know about the criteria for establishing an Islamic bank in Bangladesh. Okay, so first of all, it is for a full-fledged Islamic bank. This criteria are not for a conventional bank which is planning to begin separate window for providing Islamic banking services or converting its business from conventional banking to Islamic bank. These are criteria for full-fledged Islamic bank which has decided to start operation. So first criteria is saying that the proposed bank will have to be a public limited company. So you know the definition of public limited company. I don't want to reiterate here. And minimum 50% of the capital has to be subscribed by the public. minimum. So it has a huge significance, minimum 50%. Minimum 50% has a huge significance because some of the Islamic banks which started operation in Bangladesh in the early of the 2020s decade, they are now in the process of issuing their or in the process of their IPO, and you will see that their IPO size is a bigger size. So note that it is not their choice that they are issuing a big size IPO. Rather, by the guidelines, they are required to make sure that their 50% share is to be offered to the public. And another important and most significant is that all financial transactions of Islamic banks, here banking company means Islamic bank, you can check it from the definition. Their all financial transactions should be in compliance with the principles of Islamic Sharia. There is no scope to diverge from Islamic Sharia. The word is all, and the word is very strong, and the word is I mean, there is no word above all. So all the financial transactions. So there is no scope to make a 1% transaction which are not based on the principles of Islamic Sharia, but supported by conventional banking. So it has a immense significance. And all the ways through which this bank will operate, what are the main activities? Resource mobilization and expansion of their business through investment and through business transactions. This should be mentioned in the application form through which you are applying for the license from Bangladesh Bank. So how you will mobilize your resources, how you will expand your business, this should be stated in the application form. And then for operating Islamic banking facilities, you must have expertise and you must have some facilities. And what are the expertise and facilities you already have? This should be indicated in the application form. And now, before making discussion on what are the specific amount of capital requirement for setting up Islamic Bank in Bangladesh, let me share a poll with you so that I can check that what you already know. Okay. You see one poll which is asking the minimum paid up capital required to commence Islamic Bank in Bangladesh. So you can pick an option which seems to be more appropriate in your eyes or in your mind. And the second question is, in case of Islamic Bank, how much share, how much stake an individual shareholder can hold? Are you seeing the poll?
Yes, sir. দেখতে পাচ্ছি, sir.
Okay, please respond to the poll by giving your answer. First question is about the minimum paid up capital to commence Islamic Bank in Bangladesh. And the second question is, an individual shareholder can hold how much stake in maximum? I see responses are coming, but not adequate. Out of 20, only 4 people have given responses. So Please participate so that I can check. We'll be making discussion on that shortly. I see one risk-free response from one person I do not know. It is good. You are in a safe side. Okay, still more than 50% people have not given their option or have not selected the option. Only 50% have participated. You have to choose two. Okay, you have to choose two answers. Okay, but I see no responses from 50% participants. Okay, without taking further more time.
Sir, from phone. Sir, can see the phone.
Sorry?
Sir, I can't see the poll from my phone, sir. I have to log in from my PC.
Okay. I do not know what are the technical issues with a smartphone. Okay, it should be visible in any device. Okay. So let's end the poll and see the result. Let's share the result. You're seeing the result? Okay. So out of the responses you have made, I see no one has selected 3 billion. 3 billion. Okay. So I have not mentioned the denomination. Is it in taka, dollar, or in either currency? So no one has raised the question that in which currency you are mentioning this minimum paid up capital. Okay. So you'll always have to look for the trap in the multiple choice question. Okay, in that case, the good answer would be I do not know. Okay, whatever, the mentioning of no currency was a mistake. By default, as we are in Bangladesh, we are assuming that the currency is in taka. Okay.
Sir, that is what I was
you are
going to
thinking
say
of
that.
I do not know for that reason actually.
No, definitely, but we didn't look for that deep as you mentioned that how much is required in Bangladesh. That's why.
Okay, fine. Okay, so I see out of 15 responses, 9 responses are for 4 billion taka. So it is a kind of representativeness bias, because you see the conventional banks require 4 billion paid up capital taka. So you believe that Islamic banks also need to start their operation with 4 billion taka. So it is only 2 billion. The correct answer is 2 billion taka. So 20% people, 20% respondents have selected the right answer. So you can see one of the motivations why the new banks are coming in the form of Islamic banks rather than conventional bank. So to start an Islamic bank, the minimum paid up capital is 50% less than the capital required for conventional bank. So the answer is 2 billion taka. So it is for the starting, and I'll mention what are the additional requirement later. Okay, second, I see only one participant has picked the correct answer, that is the 10%. So maximum shareholding stake which can be held by individual sponsor or individual shareholder, maximum stake can be 10%. So it is not 2.55 or 7.5%. Okay, let's discuss on these two issues. Then, okay. So according to the guideline for Islamic banks, Bangladesh Bank is asking for minimum 2 billion taka paid up capital as a requirement to begin a Islamic bank. And after beginning of the Islamic bank, what you will have to do, you will have to maintain a percentage of the risk weighted asset as a capital, which is known as capital adequacy ratio. You probably have heard about it as a CAR ratio. So out of the risk weighted asset, so all of your assets are weighted for the appropriate risk measure, and based on that, the capital requirement is set. And this practice is from Basel. You probably have learned about Basel. Have you heard about the Basel guidelines from the
Yeah,
Bank
Basel
for International
Accord.
Settlement? Yeah. So that Basel Accord 3 is now being implemented. So it is asking for capital adequacy ratio more than 12%. So far I can recall, but right now in Bangladesh, banks are on an average maintaining CAR 11 more than 11.2%, 11.26 or 11.2% in this range. According to the statistic published by Bangladesh Bank in last December 2020. So you may ask whether this percentage is sufficient or not. So Basel is asking a greater capital requirement relative to the capital adequacy ratio. Greater means in these percentages, 12%, 15%. There are phases that when you will be requiring this percentage, when you will be requiring this percentage. But the matter of concern to us that out of the countries, out of the South Asian countries, Bangladesh is one of the countries which is maintaining, I mean the banking companies in these countries are maintaining lowest capital adequacy ratio in this region. It is probably more than 15% in India, and it is more than 17% in Pakistan in these percentages. But Bangladesh has the lowest capital adequacy ratio in the banking industry. So you probably have heard about tier 1, tier 2, tier 3 capital, which are from the Basel guidelines, Basel Accord more specifically, but that is not the part of our today's lecture. So, but I'm just for trying to make you understand that what does it mean by the capital adequacy ratio, I invited those concepts. Okay, so I was saying that what is the maximum shareholding stake for the sponsor of Islamic Bank? Maximum is 10%, and one individual sponsor can be individual, it can be a company, it can be one family member, or it can be either severally or jointly. So they can hold maximum 10%. But there is a follow-up point which is saying that this ceiling, I mean, when it is ceiling, when it is maximum, that's why the adjective is ceiling. So this ceiling can be relaxed by when it is with a joint venture with a foreign financial institutions. In that case, it can be relaxed. Okay. And after the establishment, the sponsor cannot transfer their share within 3 years. And who cannot be sponsors? The sponsors cannot be someone, you know, the sponsors are the sponsors who are planning to set up an Islamic bank. Okay, the entrepreneurial shareholders. Okay, so there cannot be someone who has been convicted for any criminal offense or who has been involved in any illegal activities, who failed to settle the prior liabilities of bank and financial institutions. For that purpose, they have to submit all kind of transaction document they have with the banks and financial institutions, and they must not be someone who has evaded tax or failed to pay taxes properly, and there should not be any kind of issues regarding the reputation which compromises their integrity and performance. Okay, now the big point, the chief executive. Who shall be the chief executive of Islamic Bank? The chief executive of Islamic Bank should be someone who has at least 3 years banking experience, not conventional banking, Islamic banking experience. Why I'm saying this is a significant requirement? Because you see that what is actually happening. According to my observation, some executives who spend their whole life working in a conventional bank, after retirement from conventional bank, they are becoming chief executive officer of Islamic Bank. Does it comply with this guideline? No, sir. But it is actually happening. So when someone is from conventional bank who has spent their life doing the conventional banking practice, you cannot expect that he or she will be very prudent in practicing Islamic banking and actually holding the light of Islamic banking. So that's why you see that divergence from Islamic Sharia is very likely to happen in the Islamic banks, because the people who worked in conventional banks, they have been recruited by the Islamic banks, Islamic banking companies. They have been recruited by Islamic banking companies without fulfilling this requirement that they have at least 3 years of Islamic banking experience. So that is a good point. You can check by yourself that out of the 9 full-fledged Islamic banks who are holding the chief executive position, what are their prior positions? Are they are from conventional banks? Do they have any experience of practicing Islamic banks? So I see someone who are holding the chief executive position of Islamic Bank for more than 3 years after finishing his tenure from a state-owned commercial bank. Then he again After finishing his tenure in Islamic Bank, he has now switched to a conventional bank as a chief executive. So that is happening. So in that case, you cannot expect that a person who is very adept in conventional banking, you will not, it is not very likely that you will see that he is complying with the Islamic Sharia properly in the Islamic banking operation. So it should be someone who is very adept and who is very diligent to practice the Islamic banking. So you see the chief executive position here does not mention any requirement that that person should be someone who has a very, a strong knowledge on the Islamic Sharia regarding the Islamic banking practices. The requirement is not mentioning such thing. Though it has been mentioned that what are the expertise you have, it has been mentioned here indirectly that you have to indicate what are the expertise and facilities available with you for ensuring that you will be adopting Islamic Sharia. Okay, now these are some documents you have to furnish along with your application form for getting license from Bangladesh Bank to operate as a Islamic bank. Okay, now it is saying that in addition to this guideline, you will be subject to prevalent banking and other laws. And now second section is a second point of the section number 2 that is saying, if you are someone, a conventional bank, if you are a conventional bank, you want to obtain an Islamic banking license for opening some branches which will be dedicated for offering Islamic banking services. In that case, what are the eligibility criteria you have to maintain? So you have to check that you have to make sure that you are adequately strong in terms of financial strength, and you have a strong capital base, and you have a strong capital structure, you have a good record of earning capabilities, liquidity position, track record of adhering to the prudential regulations set by Bangladesh Bank. In addition to that, you have this kind of objective requirement, which is here, that your camel rating, you need to learn about this camel rating used by the rating agencies and also used by the regulator to check that how good the banks are performing in terms of adhering to the regulations, which ranges from asset management, liability management, risk management, capital adequacy management, these things. And also from this department, on-site inspection of Bangladesh Bank, there should not be any adverse report against you. And you have to submit some working paper which are here, that how many branches will be in line with Islamic Sharia. You have to mention those specifically. Then there are some strong criteria. You see, they are required that you will be giving commitment that you will keep fund and accounts of Islamic banking branches completely separate from those of the conventional one. So the funds and accounts of Islamic banking branches should be completely distinctive from the funds and accounts maintained for conventional branches. Now, the question is, maintaining separate account is relatively easier than maintaining funds separate. So you know very well why this why this guideline has been given, but you see that is it practically feasible? Is it practically feasible? You can maintain a separate account, but in terms of fund, it will be challenging. It will be challenging because the characteristic that money is fungible. So when I have money from different sources, I can maintain account. I can record that from which sources I have received which amount, but physically it is close to impossible to separate this fund, and to identify that which fund is from which source. But they have to maintain, they have to provide a commitment. They will keep the funds and accounts of Islamic banking branch separate from the funds and accounts of conventional branches. And how they may separate the funds of the Islamic branches from the funds of commercial branches, they should mention this method in the application form to this to the Bangladesh Bank. And also I like to highlight here that you should create a separate division which is named as Islamic Banking Division, where in your head office, you have to create a separate division which is Islamic Banking Division. And you also have to mention that what are the experiences of your executive regarding the Islamic banking. You have to furnish this information to Bangladesh Bank. And also you have to identify what are the responsibilities and duties of Islamic banking divisions which you have set up to integrate and to centralize the activities of Islamic banking branches. And how you will maintain coordination with the Sharia Supervisory Committee. And you know that for Islamic banks, this is mandatory requirement that you have to include a Sharia Supervisory Committee. And for conventional bank who will be opening separate window for providing Islamic banking services, they will also have to form a Sharia Supervisory Committee. And they have to make sure that they are investing the fund which is received from Islamic banking business, and these funds are being invested only in those investments which are approved by Islamic Sharia. And separation of funds of Islamic banking branches and control and pursuance of appropriate procedures are to be ensured for safeguarding the interest of depositors. And how you will be doing it, and it is very important and it is very challenging for a conventional bank. So they have to provide the ways which they will be maintaining for doing or for implementing this. And the next point we like to highlight that you see that it is not only maintaining, not only maintaining separation of fund and the accounts. In addition, you are required to maintain separate books, separate deposit receipt, separate checkbooks for Islamic branches. You see, this is significant. In addition to that, you will also have to maintain separate software. You have to maintain a separate software, separate ledger books for your Islamic banking branches. You see, okay, you see, you have to maintain separate ledger books, separate software for keeping the record of deposit, investment, profit and loss accounts of which branches, Islamic banking branches. So we have to check that whether the conventional banks which are offering the Islamic banking services separately, are they finding it very easier to maintain these guidelines, or they are finding it very challenging. It should be challenging. Okay, now the third way, that without starting a full-fledged Islamic bank, or without offering Islamic banking services separately, what you are wanting to do now, you want to convert your total conventional bank to an Islamic bank. Have you seen this practice in Bangladesh? It happened in Bangladesh. The information is it happened.
Yes, sir.
The question is which bank has, which banks or which bank have or has done this?
Recently, sir, Standard Bank, then NRB, Global Bank, three banks has converted into Islamic banks.
Okay. Do you think it will be easier relative to starting a full-fledged Islamic bank, or opening a separate window for Islamic banking services, or it will be relatively more difficult?
It's too much difficult, sir.
It will be too much difficult. That is true. So you see that you have to set up all necessary procedures, create the required tools, and explore alternatives to non-permissible financial practices, and train and promote the personnel required for proper implementation of the procedures of conversion. And it is a huge point, and it is a huge requirement, the number one point. Okay, and you have to make an appropriate administrative arrangement, because the definition of your operating license is being changed. The definition of operating license, which you took earlier for a conventional banking, this definition has changed significantly. In that case, what you need to amend? You need to amend your memorandum of association. You need to change your articles of association. Have you heard about these two documents from your earlier courses, earlier fundamental courses of business? Memorandum of association, articles of association. If no, please look for this. These are very basic requirement for setting up a company. Okay, now you depositors, or the are conventional depositors, not the Islamic bank depositors. In that case, what you have to do? What you're doing, you are converting your conventional bank to an Islamic bank. You have to take a no objection certificate, NOC, or NOC document from the depositors that I am converting my convention, not mine, I mean our conventional bank to Islamic banks. Do you have objection? From this is a question to the depositor. And you also have to make a special program for preparing your personnel, your staff, to implement the Islamic banking practices. And what can you do? And that you see that you already have, as a conventional bank, you already have existing dealings with the conventional bank. What can you do after conversion? You have to limit it as minimum as possible, because you are now Islamic bank. So you have to limit your dealing with conventional bank to the magnitude that there is no other scope. That's why you are taking this dealing with the conventional bank. In that case, however, you have to limit this dealing. And now you see that when what will happen to the interest-based receivables, impermissible earnings, obligation. You see that as a conventional bank, you already have interest-based receivable. What will do? Impermissible earnings, you already have the impermissible earnings. Impermissible means not permitted by Sharia. And what can you do in with these assets? In that case, you can immediately liquidate. You can immediately liquidate all of these interest-based receivables and convert it. And wherever the receivables are with, it can be with individuals, it can be with banks, or it can be with central banks. You can you have to liquidate it. And you also have to confine yourself to the permissible operation for acquiring the necessary funds to operate or meet its liabilities. So you cannot have a, you are now confined. When you are complying with Sharia, you are now confining yourself. You have restriction regarding your operation. You have restriction on investment. You have restriction on deposits. What you can do, you cannot do. And also, if you have accumulated reserve, which has been accumulated from some non-permissible transaction, in that case, you have to make it permissible following the Sharia law. That how can you make it permissible? So another thing is that all interest-based investment instruments need to be stopped. You already have some investment which are interest-based. It needs to be stopped, must cease. Okay. And it must be replaced. So what can you do? You can replace it by permissible investment prior to date of conversion. Now, this is a challenging task, and it has been elaborated more that how can you what you have to do regarding your financial period, then regarding your external parties. So you will check it, and we like to highlight other sections. So another section is following section is responsibility for Sharia compliance. So this is for Islamic banks. I believe that in any way you have started your Sharia banking or riba-free banking or RF banking, whatever you say. So the board of directors are the supreme body of supervisory activity. I mean, supervising the activities of a bank or any company or an institution, and also for Islamic Bank. So it is the responsibility of board of directors of the respective banks to make sure that their services, their products are Sharia compliant. In addition to that, this board, say some researchers have revealed that this bank is not doing the Sharia compliant practices. In that case, who will be the first person to make responsible? The answer is the board of directors of that Islamic bank. So the board shall be responsible for any lapses, any irregularities in the part of Sharia Supervisory Committee. So Sharia Supervisory Committee will will oversee, but on behalf of Sharia Supervisory Committee, the board shall be responsible. And what are the criteria for the members to be included in the Sharia Supervisory Committee is enclosed in the Appendix 1. Probably Appendix 1 is a separate annexure of this document. I didn't find it, the Appendix 1. That's why I'm not, I can't show it to you. So next section are regarding the principles of deposits, regarding the principles of investment, and the how the international trade dealings will be made, these things. So let's take a break of 10 minutes. So we'll be returning after 10 minutes. Okay, in this section, we will see that how the deposits has been guided in this guideline. I mean, particular deposits products in the Islamic banks. So according to the Sharia principles, Islamic banks deposits have been classified into two principles. I mean, based on these two principles, the deposits products in Islamic banks have been developed. So one principle is al-Wadiya principle, and another principle is Mudaraba principle. So as you probably have attended the class on which we discussed on the deposit facilities in Islamic banks, you can recall that we mentioned about some deposits accounts. So you will see that these principles have been reflected on those accounts. So current account is basically based on the al-Wadiya principle. So al-Wadiya, this term is from the Amanat principle. You probably have learned about the Amanat concept, where you are, I mean, you are Islamic bank, you are receiving deposits from your client, current account client. And what is your responsibility? Your responsibility is to return the deposits to your client when it is demanded. And you have to take permission from the client if you like to use this fund of the client. So this is basically based on the al-Wadiya principle. Now, significant issue here is that any profit or loss earned or incurred out of using of this fund is held with the bank. So depositors will not share any profit. Depositors will not share any loss on the deposit products which are based on the al-Wadiya principle. So, however, if there is a government taxes, you probably are aware of the excise duty, which is charged on the bank deposit. I mean, it is charged on some other basis, but one relevant base in our case right now here, the bank deposit excess duty, it will be charged. Okay, in that case, you have to pay it, or other charges of maintenance, account maintenance charge will be paid. Okay, next one is the other deposits are mostly based on the Mudaraba principle, which is based on the sharing of labor and capital, and labor will be shared by bank and capital will be shared by the depositor. And the capital provider, I mean here depositor, will be known as Sahib al-Mal. You probably can recall that we mentioned another alternative term, Rab al-Mal. And the user of capital, I mean here in this case, a deposit, the user of the capital is Mudarib. So Islamic Bank is here Mudarib. So as per Sharia principle, Sahib al-Mal will provide advices, and he cannot impose any decision over the Mudarib. I mean, Sahib al-Mal is here, the capital provider, I mean depositor. Depositor cannot guide or cannot provide advices regarding how this fund will be used. Regarding means it cannot, he or she cannot intervene in the decision taken by Mudarib for users of this fund. So this profit, if any, is divisible between Sahib al-Mal and the Mudarib at a predetermined ratio. But there is one condition that the Mudarib, I mean the Islamic Bank, cannot charge any salary against his labor he employed for using this fund. So this is significant. Okay. Now the question is, why should the guideline mention this concept precisely and mention this concept of principle precisely, so that the Islamic Bank cannot make their own interpretation of these principles, or cannot make alternative interpretation of these services. So sometimes you will see that they are violating the principle, and they are trying to interpret the principles in their own language. So in that case, what should be checked? You should check the guideline provided by Bangladesh Bank. What is the mentioning in that guideline? So these deposits based on the Mudaraba principles have been I mean, some typical Mudaraba deposits are this. Other than this, there are other Mudaraba deposits. So, but some typical which are common in Islamic banks, you will see that Mudaraba savings and short notice and term deposit. And can you recall from our deposit products class where we discuss on deposits? Are we missing any particular deposit here? Other than this, there are some customized deposit which are also based on the Mudaraba. These are here, house scheme. Then one-time deposit-based term deposit, monthly Mudaraba profit deposit scheme, monthly Mudaraba marriage savings scheme, Mudaraba savings bond. Okay. So the question is here, are you missing any particular type of deposit on which we discussed on our deposit class, which is not present here? Anyone? Okay, I see no responses. I don't like to mention it here. You'll check it. Which deposits I have not mentioned here. I mean, which has not been included in the guideline. And that deposit also is not also available in Bangladesh, but available in Bahrain, Kuwait, and also in Malaysia. Okay. So we have seen, or we have reviewed what have been said in the guidelines regarding the deposits. Okay, now what about the investment product and investment principles? So Islamic banks, it is huge. Islamic banks do not directly deal in money. So if you see any bank is commonly dealing directly with money, you have to be suspicious regarding their compliance with the Sharia. What they do, they run business with money. They run business with money. Okay, so it is particularly applicable in case of investment, not in case of deposits. In case of deposit, they directly deal in money. They take money as a deposit, but in case of investment, they do not directly deal in money. So that's why they are, I mean, when they do business, as they do business, their usage of money is particularly known as investment, not loan, which is for conventional bank. So if they directly deal in money, in that case, it will become loan. It will not be no longer as investment. So obviously there are challenges. We have to be aware of those challenges, but we cannot forget the principles. Okay, so what are the ways they can use their money for investment? So these investment products. Most of the products you already have been aware, have been familiar with these products. Most of you have already been familiar with these products from our prior lectures. We just like to review to see that what are the mentioning in the guideline, so that you can be aware that what guideline is saying regarding these investment products, particularly applicable for Islamic banks operating in Bangladesh. So some investment products included here are Mudaraba, Musharaka, Buy Murabaha, Buy Muajjal, Salam and Parallel Salam, Istisna and Parallel Istisna, Ijara, Muntahiha, Hire Purchase Musharaka, then direct investment, investment auctioning, Qard Hasan, etc. Okay, so let's have a very high level summary of these investment products so that you can have a idea that what guideline is saying. In case of Mudaraba, it is sharing of investment product. Bank is providing the capital and lever or skill is provided by the client. So here, who is Sahib al-Mal? The bank or the client? In this case, Mudaraba deposit.
Bank is called Sahib al-Mal.
Bank is now Sahib al-Mal. Okay, it is just the contrast case in case of Mudaraba deposit. Now we are discussing on Mudaraba investment. Okay, so Mudaraba principle can be applied to deposit, can also be applied to investment as well. Okay, now how the profit will be distributed? Profit will be distributed based on the predetermined ratio. Okay, now it is said that the bank has to bear the entire loss, if any. Is it significant? Is it significant? The profit is to be distributed between the bank and the investment client at a predetermined ratio, while the bank has to bear the entire loss, if any. Now compare it with the Mudaraba deposit. What bank says in case of Mudaraba deposit? Bank says in case of Mudaraba deposit that I will use your capital. I will use your fund for business, and we'll be sharing the profit. And if there is any loss for deposits, who will be sharing the loss in case of Mudaraba deposit? In case of Mudaraba deposits, who will be sharing the loss? Sahib al-Mal or the Mudarib? Forget about the Mudarib and the client or depositor. Just think of these two. Who
The
will
Sahib
bear the
al-Mal
loss?
will have to bear the loss.
Sahib al-Mal or Mudarib? Sahib al-Mal, right? Is it? Okay, you have mentioned
Yes,
Sahib
sir.
al-Mal. Okay. Why Mudarib is not bearing the loss? Because you see, Mudarib argument is that Mudarib has employed labor. He has not charged any salary. Rather, he has also deprived of any profit because it has become loss. Okay. Now the capital loss should be borne by whom? The Sahib al-Mal, right? In case of Mudaraba deposits. So same thing should apply in case of investment. So bank, as in case of Mudaraba deposits, who is Sahib al-Mal? Bank is now Sahib al-Mal. So the loss should be borne by the bank. Okay. It has been mentioned in the guideline. The profit is to be distributed between the bank and the investment client at a predetermined ratio, while the bank has to bear the entire loss, if any. Okay. So it is about the Mudaraba investment. Now, what about Musharaka? What we have learned regarding Musharaka? Can you recall that we mentioned the joint venture or partnership term when we are trying to understand the Musharaka concept? So based on the capital providing ratio, what they will do? They will form a partnership business. And who are the Musharaka partners here? The bank and the investment client. They are the partners here. And they both are sharing the management of the fund also, of the business. And you see, the bank may need to take the permission from the investment client to operate the whole business. Now, what happens in partnership? In partnership, the profit is allocated based on the predetermined ratio. And what we have learned in Musharaka, can you recall that in profit, it will be distributed based on the predetermined ratio, but loss will be distributed based on the predetermined ratio or based on the contribution of capital ratio? You probably can recall.
Yes, sir. Capital ratio, sir.
Based on the capital ratio. Okay. So these are the some areas in which the non-compliance of Sharia might arise. Okay. Next one, by Murabaha. I believe I'm not wrong in the pronunciation. By Murabaha. Okay. So what we have learned in Murabaha, we have learned that you are a client, you require some products. So you want your Islamic bank purchase the products for you. So when your Islamic bank is purchasing products for you, your Islamic bank has to make a profit. So that profit is known as markup profit. So why this markup profit? Because a percentage will be added on that product. So Islamic bank will purchase the product for you, and you have agreed that you will purchase this product from your Islamic bank, and your Islamic bank will work as a seller. So as per the specification and requirement mentioned by the client, Islamic bank will purchase the goods, and markup profit will be added, and it should be disclosed separately, that how much is the purchase price you had to spend for purchasing it from the supplier, and how much profit you are adding as a markup. Who has to disclose this? Islamic Bank. To whom? To the investment client. Remember what we are doing here. We are checking the guideline. So you see that this disclosure requirement is a requirement from the Islamic banking guideline. Now you see that if you are working or you will be working in Islamic Bank, you have to keep this guideline in your mind. Okay. Next one. By muajjal. Probably we have not discussed on this particular investment product in our class, but it's not very unique. But on short, it is a sale on credit. So what happens here? The seller is here Islamic Bank. The seller will sell a product on credit to the client, and the client is agreed to make the payment of the fixed purchase price at a certain fixed future date. It can be in installment or it can be in a single payment, but it will not be paid immediately before taking the delivery or on delivery. Rather, it will be paid later. Because of the payment which is happening in later date, this is different from the buy murabaha. Here, you are deferring your payment. You are making your payment later. So you see that when you are purchasing product from the Islamic Bank is not actual supplier of the product. Islamic Bank has purchased the product for you because you require that product. So in this case also, you have to mention what are the requirements of the product you are looking for. So this is by muajjal. How it is unique? Because you will be paying for it later. And salam has been discussed. Salam was discussed with a good number of examples, and here the purchaser makes a advance payment to the supplier, and you might be an investment client. Now who will be paying in advance here? If here Islamic Bank is your another another entity or another partner in your agreement, here the Islamic Bank will be paying you in advance. Islamic Bank will pay you in advance on the condition that Islamic Bank will purchase the products from you. Islamic Bank will purchase the product from you. So now the question is, what Islamic banks will do with the product? That is a question. Now, the answer is that when the goods will be finally supplied or goods will be finally delivered, it is the responsibility of the supplier to sell his goods in a market, including the goods which has been purchased by the Islamic Bank as an agreement in salam. So supplier will take the responsibility to sell the goods purchased by the Islamic Bank to sell in market. So the salam here we mean advance purchase, and buyer can be Islamic Bank for this purpose. And we talked about parallel salam. What is the purpose of parallel salam? parallel salam purpose is to make sure that you will be selling your products to the ultimate buyer. Ultimate buyer means who will be actually consuming or who will be actually distributing it to the consumers. So you can recall it and you will see that these concepts are matching. And istisna, you probably can recall we talked about istisna and what has been mentioned in the guideline regarding the istisna. Here the seller pledges to manufacture and supply certain goods according to a specification of the buyer is called istisna. And an istisna agreement is executed when a manufacturer or a factory owner accepts a proposal placed to him by a person or an institution to produce or manufacture certain goods for the latter at a certain negotiated price. Can anyone explain the istisna we discussed earlier in 1 minute? From the perspective of Beximco, istisna, shukuk. Can anyone tell me how istisna works? We mentioned about it. Anyone? Should I call you by name?
It is for like for for a longer period for a big project, like a for the contractor.
So you need a project. You need a project to be implemented. What will you do? What will you do for the first time? What will you do? You will ask your Islamic bank that you need this project, right?
Yes, sir.
You need this project. Then what Islamic banks will do for you? Islamic bank will look for the contractors who will be implementing this project or who will be developing this project. And after bidding, Islamic Bank will select an appropriate contractor for the project. And when the project is completed, Islamic Bank will pay for the project to the contractor. That means Islamic Bank has purchased the project from the contractor. Now, Islamic Bank will sell this project to whom? To you, right? And
Yes,
how you will be making payment? You will be making payment, but Islamic Bank will charge profit from you, right? In this way, this now works.
yes, sir. Exactly, sir.
Okay. So you can make it more specific, or I'm just giving you the brief, the broad idea of istisna, okay? And you can also check the parallel istisna. Okay. So what about ijara? And in ijara, an asset is to be owned by a bank, and bank will rent it out for the purpose of leasing, and bank will generate income through rental income. And there is ijara muntahiya bita lake, hire purchase contract. And we gave example of real estate here, real estate developers and also the landowners. We mentioned example of it. And also another thing is hire purchase musharaka muntanaksa. So what we you probably can recall that we discussed that you need a residential apartment, for example, and what can you do? You can talk with Islamic Bank, and you and your bank will jointly purchase an apartment, and there is a ownership.
So that is hire purchase shirkatul milk.
Sorry,
Hire purchase under shirkatul milk আমরা এরকম ভাবে জানি স্যার,
hire purchase
under shirkatul milk.
yes, yes, that is the same. Hire
Okay.
purchase musharaka and hire purchase shirkatul milk same. Got it? I mean, when you are doing hire purchase musharaka, what you are doing, the equity ownership is held by both. I mean, you and the bank, and bank is holding the majority, and you are holding the minority stake, and you will be staying on that apartment. You will be paying rental, and you are planning to purchase this apartment by paying for the equity held by the bank. So what will be you do? In addition to the rental payment, you will be making a payment for purchasing the stake of the bank. So over time, what will happen? What will happen? The ownership of the bank will decline, and ownership proportion of you will go up. At the end of the term, you will become the owner of the apartment. So it talked about it under the name of diminishing musharaka. Can you recall?
Yes, sir.
Yes, sir.
Okay, so you will see this concept here. Okay, hire purchase musharaka muntanakasa. So these are some specification and features which have been elaborated by the Bangladesh Bank guidelines for Islamic banking, and we will try to see what has been mentioned regarding the investment for the import business and the export business. So the guidelines has separated the import business into three categories. One category, import of commercial goods, import of raw material for production purposes, and import of capital machineries. Now you might ask, what is the reason for classifying this import into three groups of products? So the answer is here. The import of commercial goods and import of raw materials for production purposes can be financed by the investment of Islamic banks through this mechanism, by Murabaha and by Muajjal Mot. These are applicable for top two import items. One is commercial good, another one is raw materials for production purposes. So what is about the import of capital machineries? For capital machineries, Bangladesh Bank guideline for Islamic banking is saying that it is to be made under mode of hire purchase under shirkatul milk. Okay, you just have mentioned. Okay, so you see that hire purchase under shirkatul milk is here. You will be the joint owner. I mean, you are client and Islamic banks, you both will be the owner. And over time, what you will be doing, you will make payment for purchasing ownership from the Islamic Bank, and later you will become the owner of these capital machineries. So that is that happens in shirkatul milk mode of investment. So other than this, investment in import business are also facilitated by these modes we discussed detail earlier. So let's see that how the buy murabaha system works in import case. So just for reiteration, in case of buy murabaha, what happens? There is a contract between a buyer and the seller, under which the seller sells certain specific goods permissible under Islamic Sharia and law of the land to the buyer at a price determined by charging agreed profit, margin, or markup over the cost price. So here, who is the seller? Seller is the Islamic Bank and buyer is the investment client or the buyer. So buyer makes cash payment to receive the goods or is allowed to make payment by installment. So he can make payment by installment or a fixed future date. So when it is purely fixed future date, we have seen that it becomes by muajjal or on credit. So the profit can be a fixed amount or profit can be a percentage over the cost price of the goods. Now, there are some very specific criteria of buy murabaha. We mentioned about the example earlier, but you see that the client should be agreed that I will purchase the goods from you. This is a promise that I will purchase this from you on a price fixed by charging profit over the cost price. The price which you are charging as a fixed, I will purchase it from you. This is a promise. Okay. Now the question is, can the Islamic Bank increase the price of the goods later? The answer is no. There is no scope to increase the price once it is fixed. Now the question is, if there is a scope to decrease the price, can it be done? Say, for example, Islamic banks has been able to purchase the products at a lower price relative to the price mentioned in the contract during the agreement for buy murabaha. Now, can this price be lowered?
No, sir.
I do not know the answer.
Buyer has
But
to
what?
pay the contract. Buyer has to pay the contract amount. Buyer has to pay the contract amount.
Buyer has to pay the contract amount. But if Islamic Bank wants to reduce the price, can it be allowable according to the Islamic Bank guideline set by Bangladesh Bank? You see, there is restriction on the increase of the price. There is no restriction on the decrease of price. So can it be inferred that the price can be decreased?
It depends on the bank, sir.
Obviously, it depends on the bank. Bank is on the steering position, right?
Yes, sir.
Okay. So I believe that, or I am inferring that, as there is no restriction on decreasing price, bank can, obviously bank will not do this as a profit making enterprise, but there's no restriction on decreasing the price. My point is here. Okay, if it turns out that bank has been able to purchase the product requested by client at a lower price relative to the price mentioned in the buy murabaha contract, bank has scope to decrease the price. Okay, bank has, according to the guideline, bank has, or bank is under no restriction that bank cannot decrease the price. According to the guideline, bank is under restriction that bank cannot increase the price. Okay, so you might have a counter argument. Okay, whatever it is. So until the goods are actually delivered to the client, you see that bank has to bear all the risk. This is a huge point. Why it is huge point? This is the essence that bank is actually the purchaser of the goods. Bank is not someone who is financing only. Have you seen that how Islamic Bank is distinctive from the conventional bank? Conventional bank will never ever bear the risk of goods before delivery. I mean, they will only concerned with giving money. They will not concern with conventional banks can offer you that I will purchase the products for you and you will be making payment to me later. But it is the responsibility of Islamic Bank that they have to be the real purchaser. So if you are the real purchaser, what you have to do? If you are the real purchaser, I mean, you are the real buyer, in that case, you cannot avoid risk until the goods are delivered to the further step or to the client. So as long as you are the buyer, you have not delivered the goods to the client, all the risk associated with the goods should be borne by you. Okay, so here bank is really doing the business. Bank is not lending money. Bank is really doing the business. Okay, now import of goods under by Murabaha mode of investment. So this is an good summary on how the by Murabaha is used in the import of goods. In the import business, the importer provides an irrevocable letter of authority to the bank to import specific goods on behalf of him. You see, irrevocable letter of authority. So it will not be changed. It will not be returned. So from the foreign seller, who will be purchasing? Bank will be purchasing. On behalf of whom? On behalf of the client. And client will promise to buy the same from the Islamic Bank. You see, if from the bank, who will purchase this? Client will purchase. Here, there is no dealing of the client with the foreign seller. There is two contracts. One contract is between foreign seller and the bank, and another contract is the bank with the local client. In this case, the bank is designated as a consignee in the bill of lading, and later on the bank hands over the same to the importer through endorsement. You see who has become consignee. It is very unusual in the conventional system, but it is very usual in the Islamic banking. In bill of lading, who is the consignee? The bank is the consignee. And ownership will be held by the consignee, I mean here bank, and bank will transfer the ownership of the goods to the importer later. So as per the uniform customs and practice, the seller lodges his claim or places claim for dues to the buyer's bank through the bill of exchange, and the buyer's bank discharges the claim on behalf of the buyer. The above import system is fully approved and supported by the Islamic Sharia. So this is a comprehensive description that how by Murabaha mode of investment works in the import business. And there are other forms of investment in imports by Islamic Bank, which include Murabaha Import LC, Murabaha Import Bills, Murabaha Post Import. And Murabaha Post Import includes that when your goods are on the port, and what can you do? You can ask for investment facility to the Islamic Bank, that I have the imported goods after shipment, and it is payment is due, invoice value is due, and VAT other expenses are due. What can you do? You can allow me, or you can provide me a buy murabaha investment facility. And what happens when the bank will purchase or bank will provide this facility? The client will be responsible for paying all these dues to the bank, and bank will clear this all these dues to the government and also to the exporter from foreign country. So these are some accounting issues, and similar issues you can check with the buy muajjal mode of investment. But what about the export? In case of export, what Islamic banks can do? So let's talk about some issues with the Islamic Bank. Okay, before that, let's have a very short look on the buy muajjal. We mentioned that here the client will be paying on a future date. It's look like a deferred payment system. So under this type, what will happen? The contract is between buyer and the seller for buying and selling of goods approved by Islamic Sharia. So here, who will be working as a seller? Islamic Bank will work as a seller, and the buyer will be the client. And you will see that how Islamic Bank is Islamic banks participate here. It is purely deferred payment system. So there is no option of cash on delivery. This is cash, the payment will be paid later. And now the question is how much payment will have to be made by the client. So the sale price is determined by adding the profit with the cost price. And it is not necessary to disclose the cost price and the profit markup separately to the client. You see, this is a separating point between murabaha and the buy muajjal. In case of buy muajjal, we are not saying that this requirement is necessary. But in murabaha, we saw this requirement is necessary. Can you recall? You see this difference between buy muajjal and buy murabaha, in which case this disclosure is essential. Are you there?
স্যার বাই মুরাবাহাত হচ্ছে প্রাইসটা ডিসক্লোজ করতে হয়, প্রাইস এবং প্রফিট এবং প্রিন্সিপাল।
Price and profit separation is to be disclosed in case of buy murabaha. But in case of
এটা নেসেসারি করে না,
buy muajjala, it is not necessary disclosure requirement.
নেসেসারি না।
Okay. So note that these are not important only for your MCQ questions, but also important for helping you to be a executive in Islamic banking desk. So wherever you will be working, you need to know this ins and out of the guidelines provided by Bangladesh Bank. It is actually the practical guideline followed by the need to be followed by the Islamic banks and their executives. Okay. Okay. Now the final one is regarding the hire purchase under Shirkatul Milk, for which we have mentioned that it is applicable in case of raw materials, commercial goods, or the machineries or capital goods.
Sir, capital goods.
Capital goods, exactly. So you see, the bank and the client jointly use their capital for this contract. Okay, so this partnership has been termed as shirkat. Okay, now the bank leases its portion at a certain rent. So you probably mentioned, I mentioned, you can recall that bank holds the majority stake. So majority stake will be leased out in exchange of rental payment to the client. And later what will happen? The bank sells its portion to the client on receipt of the price under this system. Now, how musharaka can be used? So musharaka can also be used. I mean, a client and bank will both participate in the import business, and musharaka agreement will lay down the amount of capital invested to be provided by bank and also by client, and the actual profit from the business of import, how it will be distributed based on the agreed ratio. But what happened to the loss? Same, what we mentioned earlier. It will be shared based on the proportion of capital. Okay. And who is in the responsibility to maintain the ledger, register, books of accounts, etc.? The client, not the bank. Okay. So these are some specification what should be included in the application for letter of credit. And now in case of export, what is available? I mean, investment in export, what are the options available to the exporters to get the facility of Islamic banks? So in case of export, as per the letter of credit, the agreement is executed between the seller and buyer, and exporter needs financial and other banking facilities on urgent basis. So these facilities can be provided by the Islamic banks through their investment and banking facilities. Now, if there are requirement of financial facilities, the financial facilities can be required at pre-shipment stage. It can also be required at post-shipment stage. And these facilities can also be termed in this way. And this is pre-shipment facilities or pre-shipment finance, and this is post-shipment finance. So how can we comply with the Sharia when we make investment at pre-shipment stage? So an exporter needs various financial facilities till shipment of goods. So for this shipment, finance is obviously needed. Finance is obviously needed for raw materials. Finance is needed for meeting the transportation. Finance is needed for all the cost involved for making the shipment successful. Okay. So how pre-shipment facilities are provided by Islamic banks? Islamic banks can provide facilities on this way for these purposes. You see, the Islamic banks can participate in these activities to procure raw material, to process the exportable goods, for transportation and packaging. So what can happen? One mechanism is back-to-back LC. Have you heard about back-to-back LC from any of your courses? This is one of the mechanism of Sharia compliant mode of pre-shipment finance. You probably have understood that it is the requirement for exporter, but have you heard about the back-to-back LC?
Yes,
Anyone?
Sir.
Yes, sir.
Would you please share your idea that what we mean by back-to-back LC? Anyone? Please.
স্যার ব্যাক টু ব্যাক এলসিটা হচ্ছে একটা এক্সপোর্ট এলসি যেটার এগেইনস্টে এক্সপোর্টার এক্সপোর্ট করবে, সেটাকে ব্যাংক লিয়েন রেখে তার যে র ম্যাটেরিয়ালস গুলো আনবে সেগুলোর জন্য মানে এলসি খোলার ফ্যাসিলিটি দেয়।
Okay. Now you see that bank extends back-to-back LC facilities to exporters to procure import raw materials for producing exportable goods at a pre-shipment stage. Usually it happens, but in case of Islamic Bank, which mode is used? So we have got the basic idea of back-to-back LC. So on this LC, there is a backup. That backup is the LC which has been received by the exporter from the potential importer.
Yes.
So using that LC, client can take the bi-muajjal financing from the Islamic Bank. So you see, for taking the financing through bi-muajjal, do we need any financial any financial obligation immediately? Because you are required to make a payment on a later date or on a future date. So if the exporter fails to pay the LC value at maturity or on a due date, the bank provides financial facilities to the client under bi-muajjal mode. Okay. So there are other mode of pre-shipment financing using the conventional type of investment bank products, which include the buy murabaha, trust receipt, and also buy salam. Using this, exporter can manage financing for these purposes. For which purposes? For these purposes, which I mentioned earlier. Okay. And you know very well. Okay. So just for giving example, you see that what happens in case of buy salam. Say you have a foreign importer. So foreign importer may not be in a position to participate in a salam contract with you, but you need advance financing so that it can facilitate your production of goods. So what can you do? You can make an agreement with the Islamic Bank. So Islamic Bank will mention that I will be making payment to you for purchasing a portion of the exportable goods. Actually, you see that the bank will not consume or the bank will not use these goods. But why bank is purchasing this portion of exportable goods? So that it can be Sharia compliant. And for this portion of exportable goods, what bank will do? Bank will provide an amount which will be required by the investment by client to process its exportable goods. So by using that financing, what will happen? For using that advance payment, the exporter will process these goods, and on agreement, exporter will give a promise that when I will be exporting these goods, I will also be exporting the portion of the goods which you have purchased. Who are you? You are Islamic Bank. So what has been mentioned here? Under the buy salam mode, the bank makes advance payment for the same, a portion of the goods, on the condition that arrangement will be made by the exporter to export the goods purchased by the bank along with other goods of the exporters. So in this way, exporters manage financing from the Islamic Bank. Now, what are the other functions? These are other modes of financing used by exporters for international trade? And what are the other functions of Islamic banks which have no serious issue with the Sharia, that is kind of remittance or money transfer facilities? In addition to that, Islamic banks also can provide these services which have no issues with the Sharia compliance, mostly including local services, issuance of bank guarantee, agent, then service charges. Can anyone just share your idea that how issuance of bank guarantee is different from letter of credit, though their purposes are similar, but how they are different? Issuance of bank guarantee and issuance of letter of credit, how they are different. We know there are some similarities, but I just like to know how they are different. Anyone, please? You can also give me an example without resorting to the definition
এলসিতে
concept.
হচ্ছে স্যার এলসিটা হচ্ছে ব্যাংকের একটা ফাইনান্সিয়াল অব্লিগেশন থাকে যে গুডসটা পেমেন্ট মানে পেমেন্ট দেওয়ার, কিন্তু গ্যারান্টিতে কোনো ব্যাংকের ফাইনান্সিয়াল অব্লিগেশন থাকে না।
So what kind of obligation bank holds in case of bank
এলসির
guarantee?
ক্ষেত্রে সাপোজ ব্যাংক যদি একটা এলসিতে মানে গুডসটা শিপমেন্ট হয়ে যায়, ব্যাংক মানে এটা অব্লিগেশন যে তাকে গুডসটার পেমেন্ট দিয়ে দিতে হবে, বাট গ্যারান্টির ক্ষেত্রে এরকম অব্লিগেশন থাকে না, ব্যাংক জাস্ট একটা গ্যারান্টি দেয়।
So bank guarantee has no financial obligation to the bank. But if it fails, I mean the issue for which bank has provided the bank guarantee, if that issue or if that activity does not happen properly, will not bank be placed in an obligation? What do you think?
স্যার এই ক্ষেত্রে হচ্ছে যার অন বিহাফে মানে গ্যারান্টিটা দেওয়া হয়, গ্যারান্টির ক্ষেত্রে হচ্ছে সে যদি মানে ব্যাংকে দেয় পেমেন্টটা, সে আবার ব্যাংক আবার সেটা পেমেন্ট করবে, বাট এলসির ক্ষেত্রে হচ্ছে মানে দেখ আর না দেখ এটা ব্যাংক করতেই হবে।
Exactly. So bank will make the payment to the exporter when it is LC.
সেলার।
Yeah, exporter. Okay. But in case of failure of the person who has taken the bank guarantee, if that person fails, bank will be in a responsible position to reimburse, to compensate the person who was supposed to receive the service from the person who failed. Say for example, when there is some big project, for example, the project that 5 floodlight facilities will be installed in the Mirpur Stadium. So a number of entities will submit their bid. In addition to that, they will also, I mean, the final entity who will be winning the bid, so far I know they have also need to provide the bank guarantee. So what does it mean? What is the implication for the bank here?
ইন প্র্যাকটিস হচ্ছে যে ব্যাংক যখন গ্যারান্টি ইস্যু করে, ব্যাংক কোলাটেরাল মর্গেজ করে রাখে যে সে যদি ফেল করে ব্যাংক ওটা সেল করে হলেও মানে পেমেন্ট করবে, বাট এলসির ক্ষেত্রে এরকম
Right, exactly. But the service receiver will not wait for the bank to sell the collateral, right?
Yes, sir. এটা ব্যাংকের ইয়ে মানে রেসপন্সিবিলিটি,
Right, right.
যেটা
So
সেল
in
করে
that case,
তারপরে ইয়ে করতে হবে।
so bank has obligation. Bank has, I mean, bank guarantee has a implication for bank. I mean, the financial implication and also it is obligation. I mean, the financial obligation, and it is not an insignificant obligation. So it comes at a cost. You have to purchase it from the bank. Okay. Now, we like to close our lecture for today by discussing on the section 6 of the Islamic Bank guidelines regarding the maintenance of cash reserve ratio and statutory liquidity ratio, which is also known as supplementary liquidity ratio. I was not aware of this supplementary liquidity ratio, but I saw this one term in the IBBL website that their executive is referring it alternatively supplementary liquidity ratio. Okay. Now, you know that for the liquidity purposes, banks are required to maintain this CRR and SLR, and you are probably aware of the difference between these two. There are fundamental and structural differences between these two, that which assets are to be included in the cash reserve ratio and which assets can be included in the SLR, and which is to be maintained where. So there are some distinctive characteristics. Now the question is, this is an opportunity cost for the banks because they cannot use it for their business. They have to incur opportunity cost of maintaining this. Okay. Now the question is, if the opportunity cost is bigger, it has a huge implication for banks because bank is a profit-making enterprise. So their target is to maintain as lower liquidity ratio as much as possible, but for the safety and liquidity management, this have been mandated by any central bank of the world. Now, I like to ask from you regarding what is the current cash reserve ratio for the conventional bank. What is your response?
Probably 4.5%.
4.5%
4.5% probably.
probably. Okay. Now, what about SLR? SLR requirement?
SLR for Islamic Bank 10%, 15% or 17%.
Islamic Bank 10%, and conventional banks
And conventional bank 17%.
17%. Okay. Any other response, please?
Sir, I think conventional bank is 13%.
Conventional bank SLR requirement is 13%. Then, and what about Islamic banks? Okay. Without further ado, let's throw another poll to check that what you perceive as the CRR and SLR requirement of Islamic banks. So you see the poll and participate here and share your response. These are for Islamic banks. What are the CRR for Islamic banks and what is the CRR for SLR for Islamic banks? Good responses are coming. But it is not still 50% responses from you. %65% participants responded. What about other 7? Okay, let's end the poll and share the results with you. Let's see what you have responded. You have mentioned that majority 46% have mentioned that it is 5%. Okay, so for a long time it was 5%. It had been 5%. However, what I came to know that after the outbreak of COVID-19, BB has reduced the Sierra requirement to 4%, both for conventional bank and for Islamic bank. So as far my knowledge goes, the answer of CRR for Islamic bank is 4%, and this 4% is also applicable for conventional bank nowadays. Okay, now what about SLR? So unfortunately, I didn't verify the correct answer, but from the IBBL website, I found that the Islamic banks are now required to maintain SLR of 6%, 6% SLR relative to the conventional banks SLR requirement of 16%. So I'm skeptical of these numbers, but this 6% for Islamic banks is likely to be correct. So I can show you it from here. Okay, that will be good. You see my browser?
Yes, sir.
Okay. SLR of Islamic Bank IBBL. Okay, I do not know whether this page is updated or not. Let's stop this result. Okay, let me show you that from where okay, what they have mentioned. Okay. Okay, they have mentioned that their SLR requirement is 6% as SRR. While a conventional bank is required to maintain 4%. Okay, Yeah, anyone trying to say anything?
স্যার এসএলআর এর ক্ষেত্রে সিআরআর টাও যোগ করা হয়, দুইটা যোগ করে এসএলআর হয় আর কি, মানে সিআরআর প্লাস এসএলআর যদি 6% থাকে, সিআরআর
Right.
4% হলে টোটাল 10%।
Right. So in that case, SLR should be 10%. SLR should be 10% for Islamic banks. So their the answer should be 10%, including SRR. But I didn't heard about this term earlier, unfortunately. SRR. Have you heard about this earlier?
No, sir.
SRR. I didn't
Yes,
know
sir.
about. I never have heard about it.
Statutory liquidity ratio।
Statutory reserve requirement, probably. SRR. Oh, sorry. They have included here in this way, supplementary reserve ratio. But if it is supplementary reserve ratio, what is the primary?
স্যার প্রাইমারিটা ওই যে সিআরআর যোগ করে এটার সাথে দুইটা মিলাই এসএলআর হয়।
স্যার ইসলামিক ব্যাংকে মেবি স্যার ক্যাশ রাখার মানে লিকুইড মানে রিজার্ভ রাখার আসলে নিয়ম আছে কিনা, সম্ভবত গোল্ড অথবা অন্য কোনো ওয়েতে টাকা রাখা হয় স্যার এবার।
তা স্যার ওই ইসলামিক ব্যাংকের জন্য আলাদা এই বন্ড আছে, বাংলাদেশ ব্যাংকে এখন নতুন করে
Yeah,
এটা বের
Islamic.
করছে।
We have
BIGB
Islamic bond.
সামথিং এই টাইপের
Right.
নাম স্যার।
We'll be mentioning it later. We'll be mentioning it. Here we see that we have. Okay. So we can say that for Islamic Bank, the SLR is 16%. Not 60. It is 16, not 16. It is confusing. I couldn't verify it immediately because these rates have been changed recently. Though these rates were fixed for a long time. SLR has been mentioned as 6%. So in that case, SLR of Islamic banks should be 10%, 6% SRR, and 4% CRR. So it should be 10% for Islamic bank. Now you see, if it is 16% for the conventional bank, what is the SLR for conventional bank?
মেবি 13% স্যার।
স্যার 18%।
For conventional bank, CRR is still 4%. And now if SRR for conventional bank is 16%. Now in that case, what will be the SLR for conventional bank?
20% হয় স্যার।
It should be 20%. It is supposed to be 20%. Now you see the big difference, 20% and 10%. You see?
Yes, sir.
So what do you think? What is happening? That's why one report I shared with you earlier, probably, the curious rise of Islamic banking in Bangladesh. And Jamuna Bank becomes the latest lender to jump on this bandwagon. And the reporter immediately highlighted this regulatory requirement for liquidity as the primary reason of switching of conventional banks to Islamic bank. So whatever, another requirement I just like to highlight, that is the loan deposit ratio or investment deposit ratio. There is a difference between the conventional and Islamic bank. So for Islamic bank, it is 80. For Islamic bank, it is 90%. But for conventional bank, it is lower than 90%. I probably can recall that, yeah, here it is. It is 85%. So you see, out of the 100 deposit, 85 taka loan can be provided by conventional bank, but 90 taka can be provided as investment by Islamic bank. So these are some reasons why Islamic banking are getting regulatory facilities, and sponsors are getting motivation to switch from conventional operation to Islamic banking operation. So what I'm saying in the conclusion, that the excess liquidity of the Islamic Bank, what can they do? Can they invest in traditional treasury bond, traditional treasury securities? The answer is no. They can make their investment to Bangladesh government Islamic investment bond. Okay, this is the Islamic bond
BGIIB.
introduced by the government. Okay, and the ratio what I mentioned, this should be maintained throughout the bank's branches, and there should be summed up. And you are also allowed to other Sharia compliant liquid investment to facilitate this reserve requirement. And there are also specifications that which accounts will be included in the requirement, in the reserve requirement, and what are other issues regarding the liquidity crisis and the utilization of surplus fund. So you see that do you have any idea what is the prevailing call money rate in our banking industry right now? Any idea? You know the concept of call money rate, just for letting you know that what is the current liquidity condition in the banking industry. It is in a very good condition or it is in a very crisis condition?
Good condition, sir.
Good
It's
condition.
in a very good condition. So what do you expect?
Rate কম থাকবে স্যার।
কল মানি রেটটা এখন তো 5.25 highest.
Okay, the weighted average. Okay, I'm not asking for the highest. Highest should be in that range, but the weighted average rate is less than 2%, 1.8 or 1.9 something percent. Okay. So on that note, we like to end our lecture today.